traders from across the globe, and welcome to the 1117th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. This video is being filmed on Wednesday night, but it's not quite for Trading Thursday. It's basically for the rest of the month of December. This video is for likely the rest of the month of December. We are in late December already. This is December 19th. So what I speak to you about in this video, likely the analysis in this video holds true right till the end of the year. Traders, we know futures trading can be extremely risky and cause substantial financial loss. Futures trading is not suitable for all trading accounts. All right, so for the video 1117 that will be filmed tonight, Wednesday night for Trading Thursday and forward for the rest of the year, traders, a lot of stuff on the board. Late December, markets are extremely choppy. In late December, markets are extremely choppy. Look at today's NASDAQ range. It was 100 points just about top to bottom. S&P 30-point range. That's very difficult. Most traders cannot afford stops in late December. I am telling you, if you're a small trader, you should get out of here. You shouldn't play this game. If you are going to stay for the rest of December, let me just tell you about a little trading program that I had with this guy from Russia. Great friend of mine. We ended up moving in together in New York and hanging out and building a trading system. I went to Moscow to meet the guy. My friend Sergey, I won't mention your last name, but Sergey, I hope you're watching the video. Really nice doing business with you back in the 90s. So Sergey, genius from Moscow, calls me up, sends me a trading system. I like what I see. A year later, I'm in Moscow checking out his system. The stories about Moscow, we'll go over it another time, my goodness, but the system worked well. So I bring him back to the United States, and the system did a lot of great things, but here is one of the tenets of the system that worked every single December that we used the system. It was amazing, and here's what the guy did. Starting on the 20th of December, or the 19th, you can call it for tomorrow's video, this program would start buying the big dip in the morning and get out on the close for the last 2 weeks in December. Buy the big dip in the morning and wait for the close every single day for the last 2 weeks of December. And I kid you not, it was a monstrous part of the system for the rest of for the year. In other words, it would basically make the year sometimes for that system. So I am not telling you that it will work today, but it looks a lot like the market that we had back in the late 90s, the one that we're seeing now. And if that's the case, for the last 2 weeks in December, buy the big dip and hold on, and it should rally towards the end of the day. So that's how you need to behave in December. You need to have stops. They need to be wide. You're better off not trading, but if you do, buy the big dip and hold on for the end of the day. That used to work for a great system in the 90s. All right, what else? Traders, the Fed has now decided that they are going to start moving things. In other words, they took $10 billion away from the asset purchases, so they tapered by $10 billion. They're not touching interest rates, still 6.5%. We talked about that yesterday, but they started to taper. What does that mean? Quick word to my omniacs, we will not be trading on Fed days any longer. I know for the last 2 years I've allowed trades to happen on Fed days, but for the 30 years prior to this, I would never allow a trade on a Fed day. Now that the Fed's starting to move rates again and starting to move around with their taper, you're going to get moves like this on Fed Day. So Fed Day for us is a watching day from this Fed Day moving forward into 2014. That's for you omniacs. Next on the agenda, traders, the Volcker Rule. Does anybody understand what happens now that the Volcker Rule has been put in effect? Let me see if I can explain it in layman's terms to most of you. After the 1929 crash, the government had to come up with some idea of how we can stop bankers and brokers from taking all the money that people deposit and gambling in the stock market with it. So they came up with something called the Glass-Steagall Act. I think it was a 27-page act. It was a 27-page bill, and it basically said, J.P. Morgan, Morgan Stanley, get away from each other. No longer are you allowed to be bankers and brokers. You're not allowed to be insurance companies and bankers. You have to separate. So what they said was, from now on, you've got to lend money like a bank lends money instead of taking money and trading with it, which crashed the stock market in 29. You as a bank, you are now going to have to start lending that money out. You're not allowed to trade with it. And in fact, what you're going to have to do is come up with some pretty aggressive lending practices to take the billions of dollars that the government has given banks in the last few years from top forward. And now Volcker is starting to make them, force them to lend it out. In other words, if the banks can't make money trading the way they used to, they have to make money the good old-fashioned way now. They got to start lending it out. That is going to make real estate go through the roof in 2014. Buy your real estate now. Remember, you heard this from Uncle Oscar. Buy it now because it is going up next year. All right, so a few things I wanted to discuss. You'll see me at the site if you don't really understand the Volcker Rule and the Glass-Steagall Act. Maybe I didn't finish this. So anyway, the bankers and brokers were separated. Well, back in 1998, the Glass-Steagall Act was repealed. These lunatics in Washington repealed that Glass-Steagall Act so Citibank and Travelers could get together, the biggest merger ever. And what happened when they did that? Started the derivatives race, which took us to the 2008 crash. You can literally pinpoint to the day that they removed the Glass-Steagall Act and allowed the derivative race to begin. You can just pinpoint from that day right to the 2008 crash. They've repealed it. They've repealed the repeal of the Glass-Steagall by putting the Volcker Rule into effect. I think it is going to be fantastic for real estate. My take on the Volcker Rule. All right. December markets are quite choppy. The weekly charts look absolutely fantastic. I can't wait to show them to you. The Santa Claus rally. Santa Claus is coming to town. That's probably what happens next, which is why I'm telling you after the 19th, you can buy the big dip and ride them into the close. Don't do it past December, but the last 2 weeks of December, that works. Why? Because Santa Claus is coming to town. So traders, I'm probably not going to do another video for you, certainly not this week. I don't know if I'll do one next week, but I will absolutely be watching markets. I'll be, doing what I always do, but I'm going to try to relax a little bit. I think it is too dangerous to give out levels. So what I did was, instead of giving you a buy level in the S&P and in the NASDAQ today, I basically gave levels where I think the markets could get to this week into next week. You should get NASDAQ up to the 35.55 level, March NASDAQ. Then 35.75 to 35.80 should happen before the year comes to an end this year. You should see S&P trade 1830, 1835, somewhere up there should happen this year. We'll see. Traders, yesterday in my trading room, and this is why you Omniacs who watch these videos need to come to livewithoscar.com. I get my Omniacs short on a Tuesday night trade for Wednesday, 1777 in the S&P. They sell it up in that area. The market dumps. We get out of half. The market dumps again yesterday, S&P. Omni covers at 1761, the low of the break. We step out, we sidestep it, and the market takes off for new highs. But something interesting happened in my trading room yesterday. Not only did we get out on the lows, once we get out on the lows, I told my Omniacs the next target Omni has is 1806, and it should happen today, meaning it should have happened on Thursday or on Wednesday. And it did. We went right up there at the end of the day. So Omni got our Omniacs short. The market dumped. We got out at the lows. I said sidestep it. It should go to 1806, but let's not get long yet. And it went to 1806. My goodness, rock and roll, Omni, rock and roll. So just thought I'd let you know. For you guys who watched last night's video, if you think we didn't score, we don't stick around at the Omni Trading Academy. The market comes down to an Omni profit objective. We scoop and run. That's what we did on Wednesday. Be there, livewithoscar.com. All right, traders, so a little bit long-winded, but I had a lot to tell you in this video because I won't be seeing you for a few days. So, late December markets are absolutely choppy. Stay away or use massive stops. Weekly charts look fantastic. I'm going to show them to you right now, which should lead us into the Santa Claus rally. With no further ado, let's go look at some charts.
I've been a member of Oscar and Omniac for 6 years, and I wish that I would have come to camp 6 years ago. The reason I came to the OMNI Trade Academy after 6 years was I was skeptical at first because I have spent a lot of money on other seminars, and I mean over $30,000 in useless information. So I was very hesitant, 6 years hesitant.
It is so simple to learn, it is almost eerie. And usually the best things are the simplest things, and that's what Oscar has developed here with this OMNI.
On the first day I said, that's it? So simple? Oscar is the perfect guy. Since you met him, a light on your head turns on. So on the first day of OMNI Camp, your life starts changing.
If cost is an issue with you guys, you should really get that out of your head, because the wealth of information you get from this guy is just unbelievable. So based on that, you got to get to OMNI Camp. Any chance you get, go.
This is the place to come. If you ever get a chance to come to OMNI Camp, seriously, you come.
Omniacs, this is why Santa Claus is coming to town, and this is why the weekly charts look so fantastic. Here you are looking at back to 2008, 2009, this whole crash area, right? It's when the lows were set. This parallel channel goes all the way since back then, all the way till today. We got above the parallel channel in the S&P, came back down, tested it, got back above it again, and the targeted area is all the way up here now. Traders, where else are the billions of dollars pouring out of bonds going to go? They have to go here. That's where they're going, and that's why this has plenty of room to move all the way up there above 1850, but we're looking for 1830 next 2 weeks before we get there. Then we've got the Dow Jones Industrial Average, traders. Plenty of room to rally on this weekly chart. Look how perfect this parallel channel has actually been all the way through since 2008. You've got plenty of room to rally there. Look at the numbers. You've got plenty of rally room before the year is over. These are all weekly charts I'm showing you. Let's go to the next one, traders. Long term here, long term parallel channel goes from the crash lows, Dow Transportation Average. Really, really nice channel here. Another smaller channel has developed here, which we got above, came back and tested. Still plenty of room to rally. This is where the billions of dollars pouring out of bonds next year are going to go. They really don't have a choice. They have to go somewhere. Real estate and the stocks are where they're going. The Russell 2000 traders, you couldn't ask for a better channel than this. It has just been picture perfect all the way from down here, and I'm talking all the way from 760, just fantastic, all the way up to 1150, 1140. It's just been massive, it's been strong, and it looks like it wants to continue. Here is your targeted area, way, way up there. Got a lot of room on the upside to go in our U.S. indices. Then you've got the German DAX traders. Look at this bad boy. Once again, major parallel channel going back from 2009, 2008 to 2009. But now we've got the secondary channel. And look, DAX can be well above 9,500, well above 9,500 here, and still have room on the upside. Traders, these charts look fantastic. This is why Santa Claus is coming to town, and next year looks like it is going to be a fantastic year for our U.S. and German, if not all, European indices. Traders, if you like the analysis in these videos, if you'd like to learn how to do analysis, like the analysis I put on these boards every night in these videos, you come on down to livewithoscar.com. Two things going on there. One, you can jump into my free trading room where, except for the next 10 days, I am at the helm 24 hours a day running these Omniacs through trades. We stay there all day, all night. It's a fantastic community. Come on down to livewithoscar.com. If you really want to learn how to read the charts, I am holding an Omni Camp. It's a 4-day training session held live here in Las Vegas. I'm holding it February 24th. 21st, 22nd, 23rd, and 24th, actually, so the week of the 24th. It's a Friday, Saturday, Sunday, Monday. I've got 3 left tickets. I've got 3 left open seats, I guess. How would you say that? I've got 3 seats left open. Yeah, I guess that's it. I've got 3 seats left open for Omni Camp. If you guys would like to qualify, come on down to livewithoscar.com, click the Omni Camp banner, fill out the application, and I will personally call you. So traders, I'm only accepting 5 applications. Lots come in. I only accept 5 traders, 2 seats maybe 3 seats are gone now. There's either 2 or 3 left. We'll find out tonight. I know somebody really wants one. So if, I don't really try to sell these seats. I don't aggressively offer the seats. You need to call me. You need to fill out an OmniCamp application. I need to get back in touch with you. We need to do a telephone interview. It's intimate. There's only a few of us. We stay together for 4 straight days. If you'd like to be part of that, remember, livewithoscar.com, fill out the OmniCamp applications. Traders, have a great late December trading. Watch out for these markets. Use wide stops. Trade wisely. Stay focused. Be nimble and always be at the ready, because I kid you not, I will say it again. Late December markets are extremely choppy, and this is nothing compared to what you will probably see in the next 10 days. All right, traders, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, traders. I will see you at the site. Have a great late December, and be careful out there. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.